Bitcoin has been in a bit of a holding pattern in recent weeks. The cryptocurrency stuck hovering around the 80,000 mark. Investors had been hoping that the White House's crypto summit could maybe spark a rally, but now they're looking for what the next catalyst might be. For more, we're bringing in Robbie Mitchnick, global head of digital assets at BlackRock, which of course has the biggest ETF that is pegged to Bitcoin. Robbie, it's good to see you, first of all. I guess, first of all, if you can help us set the scene by explaining perhaps why Bitcoin has not done better, right? There were so many hopes pinned on this White House, the big vibe shift, deregulation, and we have seen some actual concrete moves in that direction, but we haven't seen price follow. Why not?
Sure. Well, I think it's important to take some time perspective on it, right? Which is Bitcoin is still up, let's call it 15% or so since the beginning of November, right? So you saw a pretty extraordinary rally, right into the end of 2024. You've seen Bitcoin, the crypto market, give some of that back. I think that there were maybe accelerated, perhaps premature expectations of just how quickly some of these catalysts would start to arrive. Our focus now, as we look at what's unfold in 2025, is more about the pace of institutional and wealth advisory adoption, which has showed, frankly, a lot of momentum coming into 2025, and that hasn't really abated even in this price environment.
So I'm interested, given that, what do Bitcoin ETF flows look like? What have they looked like? What do you expect ahead?
Yeah, well, obviously 2024 was pretty incredible, pretty historic on that front. 2025 to start has been more negative. We've seen some outflows in the category, relatively modest in the context of the overall asset base, which is close to 100 billion, just over a year into their existence. A lot of that outflow that we've seen so far seems to be a little bit of hedge fund unwinding of the spot futures arbitrage trade, and less so in sort of the more long buy and hold directional investors that make up the fund. So you've seen the yields that hedge funds were clipping in that trade, go from double digits to low single digits, and that's, I think, a lot of what's driven some of the outflows we've seen.
Robbie, as you know, there are a lot of different reasons that people buy and hold Bitcoin. But as you also know, it's frequently referred to as digital gold, right? A store of value. Here we are in a period of time where people are feeling nervous about the economy, and it's not performing like gold. Gold is performing like gold. People are buying gold, but they're not buying Bitcoin. Can you help explain what's going on there?
Yeah, I think it's a fascinating thing, Julie. What we've seen is, if you look at Bitcoin fundamentally on a long-term basis, it really seems like an asset that should be uncorrelated or even inversely correlated against certain risk factors that exist, right? But there are periods where it does have these short-term correlation spikes. And what's interesting is some of what we've seen lately seems to be self-fulfilling and actually a self-inflicted wound by some of the research and commentary that the industry does, leaning into this idea of it as a risk-on asset at times, which really doesn't make a lot of fundamental sense when you think about what it is. It's a global, scarce, non-sovereign, decentralized asset that exists outside of any one country's economic, political, or monetary system. And so that fundamentally, we think, is what the long term is. That's why people think of it like digital gold. But you see this short-term trading correlation, and it can be a little bit self-fulfilling, at least in the short term, where before people would focus on, okay, well, higher rates, that's going to hurt Bitcoin the same way it hurts, equities. That makes some fundamental sense. But now it's been extrapolated to things that don't really make any sense at all. Tariffs, it's not clear that tariffs are any fundamental bad for Bitcoin. Economic fears. I mean, I don't know if we have a recession or not, but a recession would be a big catalyst for Bitcoin. And certainly the way the market seems to be commenting on it,
well, unless
doesn't reflect